Right. So let's discuss the MCQs asked in the November 24 exam. Okay. CA final integrated case scenario one. Tom Limited is into the business of manufacturing and distribution of toys for the past 25 years. Since inception, the company is having its own in-house dedicated internal audit department, having a team of competent and qualified chartered accountants headed by the CIA, who with the systematic and disciplined approach monitors various internal controls laid down at all levels of the functional area. Deva and Company have been appointed as auditors for 25. Deva and Company wants to use the work of internal audit function in respect of testing of the OE of controls and in respect of substantive procedures involving the limited judgment. Due to time constraints and the extensive scope of statutory audit, Messrs. Deva and Company wants to take the direct assistance of the internal auditors in the areas of physical verification of fixed assets, inventory verification, goodwill impairment assessment. Accordingly, Deva and Company are in the process of determining in which areas and to what extent internal auditors can be used, and in which areas statutory auditors will not use internal auditors to provide the direct assistance to perform procedures. Okay, SA 610. Deva and Company, during the course of identifying and assessing the RMM for understanding the entity and environment, and during the course of performing the audit procedure, finds that the company has been holding significant bank accounts and having branch operations in the tax haven jurisdiction for which there appears to be no clear business justification. Also, there was significant RPT which do not appear to be in the normal course of business. Oh my God, there looks to be that they have done a fraud through the related party transactions. Okay. The audit report of Tom Limited for 24, audited by predecessor auditor, contained the qualification regarding the RDD. In the financial year 25 also, the company does not make a provision. I think this is one of the classic questions which they have for the case studies. That last year audit report, there was a qualification. This year, as an auditor, how you report if the company makes a provision, if the company does not make a provision. SA 710, comparative information. The statutory auditors, Deva and Company, in their audit report on the current period, want to report on the same. Okay. Pursuant to the reporting requirements under CARO in respect of company's regularity in depositing the undisputed arrears of the outstanding dues to the appropriate authorities, Deva and Company are considering to take a view on the following issue observed during the audit of Tom Limited. The company, in view of the voluminous payroll data, consistently follows the method of making lump sum deposit of the estimated amount of the ESI collection and adjust the excess or deficit against the next month following month's deposit, and the difference of the said amount is always remains as insignificant. So that is clause 7 of the CARO. In the guidance note of the CARO, it is clarified that such lump sum payment of statutory dues will be considered as regular in payment. We also have one of the case study in our question bank of CARO for the same. So again, a case study question could be converted into a multiple choice question. Okay. Based on the above facts, uttar dijiye. Okay. Issue identified by Deva, oh my God, with regard to holding significant bank accounts and having branch operation in the tax haven jurisdiction and significant related party transaction is a fraud risk factor. Okay, so they say ye to fraud risk factor hai. What is the condition created by that fraud risk factor? Right, so what do we say? Fraud risk factor. Fraud risk factor. It could be related to it could lead to fraudulent financial reporting, or it could lead to the misappropriation of the asset. Now, that fraud risk factor, it could be an incentive pressure, it could be an opportunity, or it could be an attitude rationalization. Right? So here we are having these significant transactions with the related parties which are outside the normal course of business. Also having the branch accounts in the tax haven jurisdiction. So obviously, is this leading to misappropriation of asset or fraudulent financial reporting? It leads to the FFR, fraudulent financial reporting. And having the bank, the tax haven jurisdiction and doing the related party transactions which are outside the normal course of business, that gives you an opportunity to do the fraud in accounting. right? That gives you the opportunity to do the fraud in the accounting, right? So first two options where they say fraudulent financial reporting, and other two options they say misappropriation of assets. So this is not leading to misappropriation of assets. So it is a fraud risk factor relating to FFR. Now, is it a rationalization for the fraud or is it a perceived opportunity for the fraud? So obviously it's a perceived opportunity for the fraud. Okay. If you also come to the content of the SA 240, wherein we talk about the risk factors relating to misstatement arising from the fraudulent financial reporting, and you see the incentive pressure, then you also see the opportunities, and then after that you also see the attitude and the rationalization. So now in the opportunities, right, they have mentioned over here, right, significant related party transactions not in the ordinary course of business, then significant bank accounts or subsidiary or branch operations in the tax haven jurisdiction where there appears to be no clear business justification. So I think this particular discussion, if you're listening to me right now, it should also give you an insight regarding the ways in which MCQs are being made by ICAI. Right? So they've picked up the first and the last, point from this particular page, and then they've given four options. Is it leading a fraud risk factor relating to fraudulent financial reporting, or is it relating to misappropriation of assets? Then if it is fraudulent financial reporting, is it rationalization or is it an opportunity? So what do you say? It's an opportunity relating to the fraudulent financial reporting. Okay. Next one, out of the following, which view of Deva and company is the correct one for compliance with the reporting requirement under CARO as regards the lump sum deposit of the estimated ESI collection and its adjustments against the next month deposit, leaving the insignificant difference of the ESI amount. The company consistently follows the method of payment in respect of ESI, and the difference is not significant as per materiality concept. It need not be considered that dues have not been regularly deposited and hence it need not be reported. Okay. Deposit of ESI and arrears of ESI cannot be considered as statutory due. Hey Deva. Okay, lump sum deposit of estimated ESI and adjusting the excess deposit, deficit following the following month's deposit shall be considered as dues payable and hence to be reported under CARO, even though the difference between total ESI and lump sum deposit is not significant. As per materiality concept, it shall be considered that dues have not been regularly deposited and hence needs to be reported under CARO. No, it need not be reported under CARO as lump sum payment is considered as regular in payment. Okay. Next one, Deva and company assigned the following procedures to the internal auditors to provide the direct assistance that relate to higher assessed RMM, that relate to work which internal auditors have performed, that relate to the decisions that the external auditor has made in accordance with this FA. From the above, identify the appropriate procedure that can be assigned to the internal auditor. Right. So now, there is a question in SA 610 which says that, determining whether to take the direct assistance from the internal auditors. So on what basis do you decide that whether you should take the direct assistance from the internal auditor or not? It depends upon the RMM. If it's a higher assessed RMM, we say, no taking the direct assistance from the internal auditor. And second, it says it depends upon the amount of the judgment involved. If there is more than limited judgment, if there is a significant judgment involved, again, what does the standard say? No taking the direct assistance from the internal auditor. Right. It relates to work which has already been done by the internal auditor, for which they have reported or they are going to report to the management, about to report to the management. तो internal auditor का काम already हो चुका है, जिसके बारे में या तो उन्होंने management को report कर दिया है या तो करने वाले हैं. So then now they are not going to do the work again for you. So again, no taking direct assistance. And then the decision which the external auditor has made in accordance with this SA. The statutory auditor says, this internal auditor, hopeless fellow, no objectivity, no competence, no approach. I don't want to take the direct assistance. Wonderful. No taking the direct assistance. So now, in the given question, what they have said, if from the above, identify the appropriate procedure that can be assigned to internal auditor. Right. So higher assessed RMM where the judgment required is more than limited. What did we say? No taking the direct assistance from the internal auditor. relate to work which internal auditors have been involved. Oh my God. So the second part of the sentence, the second sentence looks similar to the point number 3 that I've mentioned over here. That relates to the work which has been done by the internal auditors have been involved and which will not be reported to management or TCWG by the internal audit function. What point I have written that relates to work which has been done by the internal auditors for which they have reported or they are going to report to the management. So again, over here now they have done a drafting change over there. You know what they've added over there? Reported to management or TCWG by the internal audit function. And that relates to the decisions the statutory auditor makes in accordance with this essay. So that's similar to my point number 4. Okay, statutory auditor, he's looked into the OCA, the objectivity competence of internal auditor approach, and he says, I will not use work of this internal auditor. So again, for those areas, can you take the direct assistance? No, you cannot take the direct assistance. Because in the point number 2, they have made a drafting change over there. That is why for this matter, can you take the direct assistance from the internal auditor? Yes. So that is why 2. It's if you don't read it in detail, if you don't put drops of oil in your eyes and you read, then you will certainly select option 1, 2, 3. क्योंकि है ना higher assist RMM related to work which internal auditors have been involved, decision made by the external auditor. It looks very similar to the theory which we study regarding determining whether to take direct assistance. But you have to identify that word not written over there. And that is why we say only for that particular matter. Yes, you are not going to take the direct assistance. Only for that matter, you're going to take the direct assistance from the internal auditor, which can be assigned. Right? And again, the question says from which you can take the direct assistance. So for first one, you cannot. For third one, you cannot. So only for the second one. Okay. Question number 4. Deva and Company in their audit report from the current period wants to report that Tom Limited does not make a provision for bad debt for 24-25. Identify the correct option to be resorted out of the following. As per 710, can modify their report for the previous year figures since the audit report from prior period was a qualified opinion. As per 710, can modify their report for the current year figures, but did not refer to the previous year modification. So year only previous year only current year. As per 710, will have to modify their report for the current year and the previous year, since the audit report from the prior period as previously issued includes the qualified opinion. 710 cannot modify their report but need to refer to the earlier year modification. तो क्योंकि D लिखना पड़ता है, that is why they have created an option over there. So last year there was a modification. Is it carried forward into the current year? Yes. So was it valid last year? Yes. Is it valid in the current year also? Yes. So auditor, you will have to modify your opinion for the current and the previous year figures since the audit report previously issued includes a qualified opinion. So we completed integrated case scenario 1. Now coming to 2. HVM and Company is a firm of CA based in Chennai. MB and H are the partners of the firm. The firm is engaged in various assignments, including audit, and its engagement partners who were handling their respective assignments for 23-24 dealt with the following issues raised during and after the course of their respective audit. HVM and Company are appointed as the auditors of AST for 24. CAV, the engagement partner, while conducting the audit of AST, was encountered with significant difficulties. SA 260, when you encounter significant difficulties in performing the audit, that is one of the matters that you communicate to TCWG. He observed that not only there are inordinate delays by the management, but lack of willingness by the authorized personnel of the company in providing the information necessary to perform the procedures and making the assessment of going concern regarding material uncertainty. We wants to communicate this and other circumstances as additional information in his report with the TCWG. Okay. Financial statements of Wade Limited for 24 were signed by H, the engagement partner, on 15th May. The AGM was decided to be held during the month of August 24 and on 17th May. Right? So when was the report signed? 15th May. On 17th May, the company had received a communication from the central government that an amount of 8,500 crore on account of incentives for 21-22, which was kept on hold, would be released by the company on 15th June. Right? So this is obviously a fact that becomes known to the auditor after the date of the audit report. Okay. Accordingly, the board of directors of the company agree to amend the account. So what you do, discuss the matter with the management, determine whether the financial statements need amendment, and inquire as to how management intends to address the issue. Right? So here the management has agreed to amend the accounts and gave the approval to include this amount in the financial statements for 24 and requested H to consider the matter. Okay. During the course of audit of Sim Limited, there were doubts as to the reliability of the written representation regarding the existence and the value of the certain machinery. The management gave a to prove the existence and value of machinery as appearing in the books of account. The certificate from the registered valuer shows a value which is inconsistent with the written representations of the management. So that's a question regarding the reliability of the written representations provided by the management. HD Institute of Professional Studies is a reputed educational institution providing various courses in the field of commerce and arts. The management of the institution is inclined towards imparting quality education to the students. Therefore, most of the faculties engaged by them are qualified professionals. M of HVM and Company is an alumni of the institute and has joined as a visiting faculty for teaching the financial management and accounting subject. The management of HT of Institute of Professional Studies is highly satisfied with the teaching skills and level of knowledge he possesses. Due to his capability, the management offers CAM to take up the assignment of the statutory audit of that institute, Clause 4, Part 1, Second Schedule. If I'm a lecturer in a college, can I do the audit of that college? No. Guilty of professional misconduct under Clause 4, Part 1, Second Schedule. Based on the above facts, Uttar dijiye. Okay. In view of the board of directors of Wade Limited agreeing to include an amount of 8,500 crore on account of incentives in respect of 21-22 in the financial statements for 24 by amending the accounts, CAH shall consider the following procedure. Identify the incorrect procedure from the following. And so there is the fact becomes known to the auditor after the date of the audit report, but before the financial statements are issued, and management agrees to amend. What procedure will you perform in that case? Carry out the audit procedures restricted to that amendment, not to do the entire audit again. Then extend those audit procedures to the date of the new audit report designed to provide the sufficient appropriate audit evidence regarding events or conditions that require adjustment disclosure. Yes. And then provide a new audit report on the amended financial statements. And the new audit report shall not be dated earlier than the date of approval of the amended financial statement. And in the new audit report, now there will be the dual dating. One, the date on which you completed your original audit, and one on the date on which you did the checking for the amendment, right? So is this also included in your audit procedure? Yes. And what is the last one? Modify the opinion as required by 705 and then provide the audit report. And the management is amending. Had management not amended, then we would have to modify the opinion, right? So what does it say? Identify the read properly, identify the incorrect procedure. So which is the incorrect procedure over here? D. For further analysis, I would like you to go on Google, put SA 560 PDF ICAI, go to the bare text of the SA 560, and you'll see that, even if you come to our study material also, you'll find, but, studying from the bare act, bare standard has its own different charm. So you can see that, yeah, these 3 points are given. Carry out the procedure, extend those procedures, provide a new audit report. So the last one is the inappropriate audit procedure. Okay. In response to the management offer, guide CAM whether to take up the assignment of the statutory audit of HT Institute of Professional Studies for 24. Select the correct option in terms of professional code of conduct. CAM can accept the assignment as his role is as of a visiting faculty, which will not interfere with the statutory audit function. He cannot accept the audit as it violates 412. He can accept the audit as he does not have substantial interest. Oh, you're a lecturer in a college, that is substantial interest. Cannot accept the audit as it violates 1111. And engages in any other business or occupation. No, so it says cannot accept the assignment as it violates 412. Clause 4, part 1, second schedule expresses his opinion on the financial statements of any business or enterprise where he, his partner, his firm, or his relative is in DH 24 has substantial interest. However, what is allowed? Information system work related to the employer is allowed. That is the exception to 412. Sit straight, everyone. Okay. CAV engagement partner in the course of audit of AST Limited wants to communicate as he considers necessary to include additional information in the audit report in accordance with 260. Following are the circumstances for which communication with TCWG is required. Hence, CAV in getting identified the incorrect circumstance from the below mentioned circumstance. So out of the following, which is the matter which you need not communicate to TCWG? When the auditor has concluded that there is an uncorrected material misstatement of the other information in 720, I have to communicate it to TCWG. When the auditor considers it necessary to include an EOM or an OM in accordance with 706, I have to communicate with TCWG. The draft format of my report, I always have to show it to TCWG. Whether there is an MUGC, material uncertainty related to going concern, I have to communicate with TCWG. Now, this puts the burden on the lost option. And if you already are in favor of ABC, अभी D का भी favor हो गया तो फिर तो problem हो जाएगा. Okay, there are no key audit matters to be communicated. Yeah, so then there are key audit matters to be communicated. We have to communicate to TCWG. But I won't go and tell TCWG, illa, I don't have any key audit matters to communicate. No, incorrect circumstance. That I did not communicate to TCWG. If I have a CAM, I will communicate key audit matter to TCWG. If I don't have, I won't go and tell them, no CAM, not like that. Okay. Since there arose a doubt on the representation and considering the responsibilities of HP and company to obtain representations from the management as per the relevant SAS, select the incorrect option. क्या मजा आता है इनको? Incorrect procedure, incorrect circumstance. Now, incorrect option from the following. Although written representations provide necessary audit evidence, they do not provide sufficient appropriate evidence on their own about any of the matters which they deal. Correct option. The fact that management has provided reliable written representation affects the nature or extent of other audit evidence that the auditor obtains about the fulfillment of management's responsibility or about a specific assertion. In case of identified inconsistencies between one or more representation and the evidence obtained from another source, the auditor may consider whether the risk assessment remains appropriate, and if not, revise the risk assessment and determine the nature, timing, and extent of the further procedures to respond to the risk. So if there is an inconsistency identified, auditor will check whether his risk assessment remains appropriate. Yes. Okay, the auditor may have identified significant issues relating to the competence, integrity, ethical values, diligence of the management, or about its commitment or enforcement of these, but concluded that representations are nevertheless reliable. And in such a case, this significant matter is documented in accordance with SA 230. Okay, if I just quickly bring you to the text of SA 580, right? So 580, I have to travel a long way. I have to go from the 560, 570, chapter number 5, and I have to come to the 580 over there. Oh, that's the question bank. Right? So yeah, if we see this particular content over here, although representations, they provide necessary audit evidence, they do not provide the SAAE, sufficient appropriate evidence on their own. So ये तो point number 1 है. And A option है. Furthermore, the fact that management has provided reliable representation does not को उन्होंने है ना गायब कर दिया, does not affect the nature or the extent of the other evidence that the auditor obtains about the fulfillment of the management's responsibility or about the specific assertions. Oh my God, again a question where they have done a drafting manipulation over there. The fact that management has provided the reliable representation affects, what did I just show you? It does not Right? What did I just show you? It does not affect the nature or extent of the other audit evidence, right? So which is the incorrect option in this case? Obviously, it has to be B. Right? I already showed you the sufficient, appropriate audit and the evidence for the same from our book. Okay, right? So the fact that management provider does not affect. Here they've written affect. So that is why that's the incorrect option. Kali and limited is India's. Okay, so that completes the, what do you say, integrated case scenario 5 to 8. And now you start with the independent MCQs, right? So Kali Limited is India's one of the largest FMCG company with 50-year heritage in the country. In terms of compliance of reporting under BRSR for 24, CEO and MD of the company report that at Kali Limited, our BRSR adheres to the 9 principles of the SEBI framework on sustainability reporting, informing stakeholders of our sustainability endeavors. While giving principle-wise performance disclosures, the principle-wise performance, the following 4 elements associated with the respective principle need to be covered in the report. 1, 2, 3, 4. From the above information, identify which core elements are related to principle 9. Right? The last principle is the value to the consumer, who is the last person in the value chain. Right? So which of the above elements are related to principle 9? So entities, when in the business of providing essential goods and services, should enable universal access, including to services which have been discontinued for any reason in a non-discriminatory and discriminatory and the responsible manner. Okay. Right. So let me open the ESG, SDG assurance and providing the value to the consumers in a responsible manner. And what does it say? The last point over here, entities which in the business of providing essential goods and services should enable the universal access. And if any services are discontinued in a non-discriminatory and responsible manner. So is it a core element of the principle number 9? Yes, it is a core element. So 1, do we like 1? Yes. Right. So where is there 1? Oh my God, 1 is there in ABC. So anyways, D, you are out. And for the time being, D is out. Then entity should inform the customers on the safe and responsible ways of usage, reuse, recycling, and disposal of their products and way to eliminate the overconsumption. Okay. Right. So let us see. Entity should, yes, inform, E point, the consumers, customers on the safe and responsible ways of usage, reuse, recycling, and disposal of their products and way to eliminate the overconsumption. So again, is 2 included over there? Yes, 2 included. So where all there is 2? Oh my God, 2 is only in the point number B. So anyways, these 2 are out. So you say, ma'am, B. Well, there has to be the option. Yeah, but let us just check. The entity should transparently and adequately disclose all kinds of adverse impact to the user, planet, society on the biodiversity from their product. Okay, right? So biodiversity. Is there any point regarding the biodiversity of their product? Okay, right? So companies should, yeah, yes, the point should transparently and accurately disclose all kinds of adverse impact to the user, planet, society on the biodiversity from their product. Okay, right? So is C also, third point also there? Right, so that is why the correct option. But let us see what is 4. The entities are responsible to educate and make aware their consumers and client about their rights. Right? So now you have to make aware about to your consumers about their rights, right? So now you see the point regarding these consumers, right? So it says it should make make aware to the consumers, right, regarding their rights. Right, so it should make aware to the consumers, right? So principle 2, right? Then principle 2, safe and sustainable goods and services. Entities are responsible to educate and make aware their consumers and clients about their rights. Right, so if you see point number 1, 2, 3 over there was regarding principle number 9, and the 4th point is regarding principle number 2, right? So that is why what is the correct option? B. Okay. Right. Next independent MCQ, for conducting the statutory audit for 25, CAP has been appointed by C Limited, which is on the verge of becoming a sick unit and has accumulated losses, but the said losses are not equal to or exceeding its entire net worth as per 23-24. So you've been appointed for 24-25, and then it is on the verge of becoming a sick unit. So immediately you have to remember 122 and council guidelines, notification. Also have to remember 811, that incoming auditor, you have to obtain an NOC from the outgoing auditor, otherwise guilty under 811. Incoming auditor, you have to check whether the undisputed audit fees of the previous auditor have been paid. However, this provision does not apply to a sick unit. What is a sick unit? Which is registered for not less than 5 years, and accumulated losses are equal to or exceeding its entire net worth. इधर अभी तक ये sick unit नहीं हुआ है. Accumulated losses are not equal to or not exceeding the entire net worth. So there should be no undisputed audit fees because the exception is not available. Right. The audited accounts for 21-22. You are doing audit for 24-25, 21-22 and 22-23 were showing liability for payment of undisputed audit fee payable to the predecessor auditor, which was settled completely during 23-24. So is there any undisputed audit fees of the previous auditor? No. So can you do the audit for 24-25? Yes. So they just try to confuse you in the sentences over there. In terms of the council guidelines, chapter 7, read with the relevant proviso of the guidelines, which of the following statement is correct? Abhi incorrect ka stock khatam. Now what is correct in respect of the aforesaid scenario? CAP shall be deemed to be guilty as he has accepted the audit of the C Limited, which had not paid the undisputed audit fee for 21-22, though settled in 23-24. Then how he can be guilty? CAP would not, as he has accepted the audit of C Limited, which is on the verge of becoming a sick unit, but whose accumulated losses are not equal to or exceeding the entire net worth? No. Right? So this, though it is not guilty, this is not the reason. CAP will not be guilty as he has accepted the audit of C Limited, which is not a sick unit, and its accumulated losses are not equal to or exceeding the net worth, and there is no unpaid undisputed audit fee of the predecessor auditor. Sounds good? Right. CAP shall be guilty as he's accepted the audit of C Limited, which is on the verge of becoming a sick unit, and it has not paid the undisputed audit fee, though settled in the subsequent year. Oh my God, no. The verge wala, we don't like it. Right. So what is the correct option over here? C. Okay. Next one. DEF and Associates have been appointed as auditors of GKL Limited, a PSU engaged in the generation of electricity from solar power. The COPU, the Committee on Public Undertakings, with a view to examining the PSU's physical and financial performance, is examining the reports and accounts of the public undertaking and also audit findings on the CNAG. Following are the functions of some of the functions of the specialized committee. 1, 2, 3, 4. From the above function, which are the functions of the COPU, the Committee on the Public Undertaking? Right. So what does it say? To examine the statement of accounts of autonomous, semi-autonomous bodies. Okay. To examine the estimates. So if you remember, we have the Public Accounts Committee, Estimates Committee, and the Committee on Public Undertaking. So point number 2 clearly looks to me that it is a function of the Estimates Committee and it is not a function of the COPU. Right. So wherever there is point number 2, we don't want that. From the above functions, which are the functions of the COPU? So wherever there is 2, well, that we don't want because that 2 is regarding the estimates committee. So B and C is out. So now we are left with A and D. Okay, A, to examine the statement of accounts of autonomous, semi-autonomous bodies. Okay, and this 3 is to examine the autonomy efficiency of the public undertaking and to see whether they are being managed in accordance with the SBP PCP. So we are talking about which committee? Committee on the Public Undertaking. So obviously it will check the autonomy and efficiency of the public undertaking. Yes, it will check the autonomy and efficiency of the public undertaking. So certainly which point we want is 3. So now 3 is available only in option D. So that is why the correct option should be. You understand, right? So because 1, it says autonomous and semi-autonomous bodies. So that comes for the PAC, the Public Accounts Committee. And let us just see the last point. To examine public enterprises to comprehensive appraisal or evaluation of the performance of that undertaking. So again, when they are talking about the public undertaking, that will come under the role of the 4. Right? So 3 and 4. That is why D is the correct option. And then coming to integrated case scenario number 3. XYZ and Associates LLP is a firm of CA consisting of 12 partners, has been allotted the CAC of Mahabank, a scheduled commercial bank. During the course of audit as the engagement partner, you have been asked by the GM to calculate the capital risk adequacy ratio, risk asset ratio. For this purpose, you have referred to the Master Circular on the Prudential Norms on Capital Adequacy and Market Discipline New Capital Adequacy Framework, okay, blah, 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 which provides the guidelines to be followed by banks for capital adequacy. You are informed that the basic approach of capital adequacy framework is that a bank should have sufficient capital to provide a stable resource to absorb any losses arising from the risk in its business. You have observed that capital is divided into tiers according to the characteristics and qualities of each qualifying instrument. For supervisory purposes, capital is split into two, tier 1, tier 2, representing different instruments. You have calculated the eligible total capital funds comprising of tier 1, share capital disclosed reserve, tier 2, other reserves and subordinated debt. The risk-weighted assets constitute 25 crore, off-balance sheet items are 5 crore. As part of the scope, the audit firm has been asked to find out the correct position of the DTL of Mahabank. DTL balance as on 30th September was 50,000 crore, which included the following: paid up capital reserve, credit balance in P&L, loan taken from RBI, refinance from Exim Bank and the National Housing Board, part amount of recovery from the borrower, net credit balance in the branch adjustment account, interest accrued but not accounted for, and margins held and kept in sundry deposit for funded facility. During 24-25, XYZ Associates is appointed as auditor of APP and NBFC, which was set up under the Companies Act and got itself registered the NBFC with the RBI, fulfilling the required criteria. During 25, the company commenced operations on a massive scale. You are informed that RBI has revised different facets of existing NBFC classification and regulation like capital requirement, government standards, prudential regulation, etc. based on 4 layers: base layer, middle layer, upper layer, top layer, that are defined based on size, activity, and perceived riskiness. During 24-25, APP has accepted deposits of 900 crore. While its asset size is 990 crore, it has also undertaken the following activity: SPD, infrastructure debt fund, housing finance, infrastructure. So, we say for base layer, we say PANN, and for the middle layer, we say something called as SITCH. Right? So your standalone primary dealer, infrastructure debt fund, then the C, core investment company not there, housing finance company, and the infrastructure finance company. So this looks like a middle layer NBFC. The auditors are about to begin audit of APP, for which audit program has been asked to be, audit team has been asked to prepare audit checklist. XYZ and Associates LLP have been appointed as auditors of a heavy electrical corporation of PSU during 25 by CNAG. It has been intimated about the intention of taking up the planned performance audit with the scope and extent of including the constitution of audit team, and the tentative time schedule will come well before the commencement of audit. Engagement partner has asked the audit team to prepare an ADM, as it is a structured and highly focused approach for designing a performance audit study. The audit team has informed that ADM should be prepared on the basis of information and knowledge obtained during the planning stage. Further, it is desirable to prepare ADM for each of the audit objectives. Uttar Dijiye. Based on the facts given in para 2, you are required to compute the DTL as on 30th September 2024. Okay. And so let us just quickly open the discussion regarding the bank audit, the compliance with the CRR and the SLR requirement. Okay, so I need to go back a few pages. Yeah, I think I've just crossed NBFC and reaching to bank audit over there. And bank audit. Yes, you also open in your books, whichever book, no problem there. Okay. That while examining the computation of DTL, right, compliance with CRR, SLR requirement, it says the following items will be excluded from liability: paid up capital reserve, any credit balance in profit and loss, amount of loan taken from RBI, amount of refinance taken from Exim Bank and the NHB, SIDBI, NABARD, part amount of recovery from the borrower. Oh my God, let us see what is happening in the question. DTL includes the following, okay, right? So 50,000 crore. Take out calculator, right? 50,000 crore, which has include the following. क्या पढ़ा अभी हमने? क्या पढ़ा? The following shall be excluded from the liability. So, all of this has to be excluded from the liability. Paid up capital, reserve, credit balance, loan from RBI, refinance from the Exim and the NABARD, part amount of recovery. Was part amount of recovery का point also over there? Yeah, तो इतना तो minus कर ही देते हैं. 50,000 minus 25,000 minus 1650 minus 1210 minus 575 minus 480 minus 125. तो अभी कितना आया है 18,960. Okay. Then what does it say? Net credit balance in the branch adjustment account. So now net credit balance in the branch adjustment account, that is to be included in the liability. So that is why that no minus. This one, 105, no minus. Interest accrued but not accounted for in the books. Interest accrued but not accounted for. क्या लिखा है? Interest accrued but not accounted for is included in the computation of DTL. So again, this now I am not going to minus. है ना? ये भी no minus. Margin held and kept in sundry deposit for the funded facility. It's a margin kept. Right? So obviously it is not a liability. So it should be excluded from the liability. Oh, I need to put this to charge. Just a moment. Yeah, sounds good. Okay. Right. So margins held and kept in sundry deposit for the funded facility. What does it say? It is to be excluded from the liability. So the last one minus, right? So 18,960 to ab tak aaya hai. Now minus 18, right? So it is coming to 18,880. On your own calculator, is it coming to 18,880 over there? Yes, and I hope there is an 18,880 option over there. नहीं तो लाइफ का एक बड़ा प्रॉब्लम है कि हमारा जो अमाउंट आता है वो 4 ऑप्शंस में होता ही नहीं है. Right? So yeah, looks like the correct option over there is D. And so it is D, 18,880. Next one. Keeping in view of the information in para 4, in the case of performance audit of PSU, which one of the following part of the AGM, not a part of the AGM? Patapat, let us come to the chapter on the PSU. You say, ma'am, I've seen all this in the book. Oh, that's amazing. Good. Right? So, yeah, ADM. Yes, so ADM now, which is not included. What does it say? Audit program. Do you see anywhere in this dabba over here? Have they mentioned audit program? No. But what? Let me see the further points over there. Evidence, audit question, data collection and analysis method. Right? So evidence, okay. Evidence, question, data collection and analysis method. Right? So what is not included in the ADM? It is the audit program, which is not included in the ADM. Okay. Based on the facts given in para 1, you are required to arrive at the correct percentage of the CRAR for the Mahabank Limited. Okay. So tier 1 capital plus tier 2 capital divided by the risk-weighted assets and the off-balance sheet item. So how much is the tier 1? 200 crore and 20. So all of this is to be considered. 220 plus 30 and subordinated debt is also to be included. So that is 30 plus 20 coming to 50. So that is 270. And what is the risk-weighted assets and off-balance sheet items? 30. So 270 divided by 30. How much is it coming to? 9, right? So it is 9%, right? It is the 9%, right? So again, in the book, yes, in the syllabus, if we come to the bank audit discussion, right? In the bank audit, where you come to the discussion regarding the liabilities, okay, liabilities, right? Wherein you see the discussion regarding the capital to risk asset ratio. It talks about the eligible total capital fund. So tier 1 capital consists of share capital, disclosed reserve. Tier 2 capital consists of certain reserves and certain types of subordinated debt divided by the risk-weighted assets and the off-balance sheet items, and it should be 9% on an ongoing basis. Okay. Right, and the last one, keeping in view of the information in para 3, identify under which layer or PP Limited will be categorized. Okay, right. So again, let us come to the NBFC chapter, wherein we look into the layers of the NBFC over there, right? The layers of the NBFC. So we have the base layer in which we have the PAN, right? The peer-to-peer lending account aggregator, non-operative financial holding company, not having public funds, not having the customer interface. All deposit taking irrespective of the asset size, non-deposit taking asset size of 1,000 crore and above, and those which are undertaking the following activity: standalone primary dealer, infrastructure debt fund, core investment company, housing finance company, and the infrastructure finance company. Okay, right? So what is given in the question over here, right? Has accepted deposits of the 900 crore, while its asset size is 990 crore. Right? So here, what does it say? All deposit taking NBFC irrespective of its asset size. Right? So all of them come under the middle layer. And also, what is the activities that it has conducted? Even those are for the middle layer. So based on that, what should be the correct option over here? It is the middle layer NBFC. Right, so oh my God, right? So 44 minutes of the recording so far, right? So we have had a detailed discussion. Do let me know your inputs and what further type of videos or content, should I record for your preparation for CA final audit for the revision purpose, right? So thank you so much in case you've given me so much of your time, and I hope that it has contributed, giving you the right perspective for preparation for the audit paper going forward. Okay, so thank you once again. Bye bye.